He is a founder of bursaking.com, which is an online research portal that he invested a lot of time and effort and money to build it, right?
Yeah, it's like my baby lah.
Yeah. Okay. He's also editor for kclaw.com, which is a number one personal finance blog in Malaysia, I would say, and he's a columnist of Fifth Person and also Value Invest Asia. So you have done a lot of work for these two, would you call it media company?
Yeah, you can say that
Financial
lah.
media company in Singapore, and he's a dividend investor. He
Correct.
invests for long term, and today he's going to share with us how he used SMA Crossover Method to find profitable trades.
Yep.
All right, so over to you, Ian.
Yeah, sure. All right. First of all, thank you so much again.
Yeah,
Shane,
no problem.
for such a wonderful introduction. So without further ado, let's get into it. So do I press this button?
Yes.
Yes. Okay, so basically, let me just give you a background of today's webinar. So in general, in most cases, I like to actually communicate with my pool of subscribers, and usually these are the 2 or 3 common questions that will actually pop up when it comes to stock investing. All right. So the 2 questions, all right, I have actually stated 2 questions, but I'll add on one more lah, because
3 lah.
yeah, got 3 lah. All right. Why I got 3 left? Because just now the third one just popped up from my mind only lah. So the 2 questions are like this. The first one is actually this: stocks, all right. There can only be 3 scenarios. Let me state the first 2. The first one is actually stocks going up.
Yeah, going up.
Let me say the stock price is going up. So the question is, will it continue to go up, or will it come crashing down? All right. It's always the case.
Yeah, so usually
It's usually the case lah. And then of course the second common question would be when the stocks are coming down, right? When the stocks is coming down, you may be wondering, will it continue to go down? Or is this a good time to actually grab the stock at discounted prices? So it's always these 2 questions. So what is the third one? The third one, which is not stated here, is this: some stocks tend to move, all right, usually on the sideways.
Sideways.
Yes, it's actually moving sideways. Why moving sideways? Because tak tentu arah lah, means to say, some say it's a good time to buy, some say it's not so good time to buy, so the stock will just move sideways. So the question is always this: if it's moving on the sideways trend, will it go up eventually, or will it eventually come down? So it's always these 3 questions, right? Where would the stock go?
Where would the stock go?
All right, so these are the 3 common questions. So usually lah, all right, there are a few ways to actually tackle these particular questions. So they are as followed. So again, I will actually give you 2 common answers that I personally found.
Okay.
All right. So the first one is actually this. It's called dollar cost averaging. I'm sure if you have been listening to tons of financial seminars, webinars, workshops, you may actually come across this term, dollar cost averaging, especially from your unit trust agent friends lah.
What does it mean? Could you tell us a bit more about it?
Okay, so I'm going to explain what is dollar cost averaging. So dollar cost averaging is something like this. Let's assume that every single month, let's say you're working, right? And you can actually put aside, let's say $2,000, all right, or any fixed amount, $2,000 aside, and you are going to invest, all right? So when it comes to unit trust, usually most of the case is actually unit trust, whereby the $2,000, right, you keep putting it into the same fund, all right? So that means, let's say the month of January, you have 2,000, you will put it into unit trust fund, let's call it A fund, all right? And A fund is actually at certain price, let's say $1 per unit. February, you do the same thing. You put aside the same $2,000 and you put it into the same fund called A fund, but this time you're going to get more units because A fund is actually
drop.
Yeah,
the
price actually dropped, so you get more units. But in March, you put aside the same $2,000, you put it into the same fund called A fund, but this time you get lesser units because you're buying it at a high price. All right. So what does that mean? That means to say, regardless of the price of the investment, low, high, or fair, you buy. All right, and you buy it on a fixed basis. All right. So this is actually called dollar cost averaging. So this technique is actually being promoted because they don't want people to actually try to outwit or outsmart the market. They want people to actually treat investment similar to how saving should be lah. put aside every month a certain amount for your savings and stuff like that. Don't try to beat the market and stuff like that. All right. So basically, of course, in every single strategy, whether it's dollar cost averaging or whether it's other investment strategies that are available in the market today, there are always some flaws lah. So for me, this is actually from my own personal opinion. So I believe if, let's say, unit trust A fund, let's say the A fund is actually a good fund lah. Let's just assume. All right. So the ideally an investor will actually want to pick up more of these kind of units when their prices are actually at their lowest lah, not when they are at their highest. So this technique has a little bit of flaws because how would I say it? That means to say you are actually buying something which is good, some good investment, but at a high price. Usually that is not the most ideal case lah. So that's the cons behind dollar cost averaging. All right. But anyway, the technique states that you are supposed to actually smoothen it out. Let me say, should average it out, the high price and the low price, so that you get the average price. So that is called dollar cost averaging. Now, this technique, this dollar cost averaging will work only if, number one, just now if I say A fund, right? The A fund works.
It's a good fund.
Yeah, it must be a good fund. If it's a bad fund, no matter how you average or so, it won't work.
Because the price will go cheaper.
It's not only going to go cheaper, it's going to go down and down and down until you can forget about that investment. Because it's like this lah, whatever price you pay for a bad investment is always going to be a bad investment anyway.
Yeah.
That's number one. Number two, it works well if you decide to hold it for the long term. It's never a short term game. All right. So that's why you hear about your unit trust agents telling you to invest for the long term. Why? Because it only works in the long term. Okay. So these are the few things lah about dollar cost averaging that people should take note of. But for me, I have another version which I call it value cost averaging.
Value cost averaging, which is your revised version, right?
Yes, it's a revised version. It's an improvised version of DCA. So now I'm gonna explain the difference. Okay. Now, just now in DCA, which is dollar cost averaging, you put in $2,000, you put into some investment, all right, a fixed investment, regardless the price you buy. Value cost averaging is like this, the same thing. Every month you put in, let's say $2,000, a fixed amount for investment. Okay. Now, the thing is this, why do I say value? Because now when you have the capital to invest, all right, you will actually assess the deal as it is. Let's say January, let's say you find a good investment. Let's call it A stock, for example. And let's say the price is good. Okay, therefore you buy. Okay, that's it. January. February, the same $2,000. But right now, stock A has actually gone up in price. And if stock A has already gone up in price, to us, it has become less attractive as an investment.
It's not value anymore.
It's not as cheap, as discounted as ever before.
Yeah.
But the thing is, there are other investments, all right, that are available which are at cheap and undervalued prices, all right? Because in Bursa Malaysia, we have like 900 over stocks. So why just stick to one, right?
Yes.
So there could be another stock which is called stock B, which is fundamentally good, but it's actually trading at discounted prices. So because of the prices, B stock at that time is better than A stock. And therefore you take the same $2,000 and you go and buy B stock. All right. And of course you can do that for the following month, which is in March, April, May, and so on and so forth. So what is this? So this method is something like this. You still put in the same 2,000 a month or whatever fixed amount a month, but instead of being fixated to certain kind of investment only, now you have this strategy. You may need a pool of investments, and then every single month you just pick which one is the most worthwhile to invest at that point of time.
All right, so you have a pool of stocks, probably let's say 10, and then every month you see, oh, your 2,000 should go to A, B, C, D, E, or H.
Yes.
For example, okay. And instead of sticking to one, but you have this wider selection of good fundamental stock that are trading at discounted price.
Correct.
All right, so that's what you revise it as value cost averaging technique. Wow, thanks for enlightening us.
Yeah, it's worth its weight in gold already.
Alright.
Okay, now I'm gonna just move on. Yeah. So this particular value cost averaging, as you can see, the whole idea about investing is this. It's always about getting quality stuff at the most discounted price, at bargains lah. That means it's like Malaysian lah. Always want to buy cheap.
Yeah, we like bargains, right?
Yeah. And therefore, why do we trade? All right. You may actually wonder. All right. Just now Shane Chu actually introduced me as a dividend investor, right? I make around.
But you also trade?
Here's the secret lah.
Oh, here's the secret.
Here's the thing.
Tell us what is your secret.
Here's the thing. All right. Basically, I believe that everybody can actually build a portfolio that where you can actually derive passive income, dividend income on a regular basis. So for me, I'm actually getting around 5 or 6%, around 6, more than 6.
It's incredible result for dividend.
So the key reason why is this, okay, is of course number one, the stock must be good in paying dividends. It must be very capable in paying dividends. And second, the 6%. The 6% can only happen if you get it at the best possible price. You cannot buy something which is good at a very high price. Then you won't get 6% dividend.
Correct.
So you must actually aim to buy low. So because investors aim to buy low, therefore you trade lah. Therefore you need some understanding about trading, and you may need a basic trading plan to actually help you to get discounts. So the whole mindset is very simple. Why trade? Get discount. Finish.
So the sole purpose of trading is to buy the discounted stocks.
Yes. The good ones especially. Okay.
Yeah. So if bad one, you don't trade.
Bad one, don't need to trade.
Okay. Bad one, don't need to trade. Okay.
Bad one, don't need to trade. Just focus on the good ones. You still can make money one.
All right.
So here's the basic game plan. I'm gonna put this in as a background. Just keep it in your mind because it's very important. Because this has actually helped me. It has been a fundamental block or principle that has actually helped me to get the 6% dividends. So number one, what's a good investment deal? A good investment deal is always, it has two components: good stock, good price.
Yeah, good stock and good price. So tell us what is good stock.
Good stock means any stock that grows profits consistently. All right, very simple, right? Grow profits consistently. And
the time frame is 5 to 10 years, right?
Yes.
Okay.
So why 5 to 10
why
years?
5 to 10 years?
Okay. Some investors, they tend to look at the latest 1-2 years, which to me is actually not very reliable, because what you want is, you don't just want to make money. You want to make money sustainably. You want your portfolio to be resilient, and you want your portfolio to be steady enough to withstand any sort of economical or political environment. Good times, bad times, ringgit up, ringgit down, oil price up, oil price down. Every single situation, the portfolio is steady. So that's why 5 to 10 years is a good benchmark, because 5 to 10 years, a lot of things have already happened in the 5-10 years. So if the stock has demonstrated good earnings, good financial records for the past 5 to 10 years, that means to say it has actually, the management or the business model is very steady, and it can actually deliver good returns to its shareholders, regardless of market conditions. So I think that's very good. That's why 5 to 10 years.
Yeah, I think for 10 years, right, we could also see that the company maybe have gone through the down session, okay, the economic recession. So if the company is strong enough to withstand the economic recession, and the profit is still growing, that means it's definitely a fundamentally very strong company.
Yes, exactly. Yeah. So that's very important. Must be good stock.
So that's point number one, good stocks.
Point number two, some people say good stock, but then overpriced already. How? Yeah, don't worry. Pasal Malaysia, besar securities got like 900 stocks. 900 stocks. Sure got good ones. Sure got bargains one. Sure got something to shop for. Only if you shop long enough, you will definitely find them. All right.
Okay. Yeah.
So good price means what? Good stocks at the lowest possible price. Finish.
So that's good price. Okay.
Yes.
But the first principle must be good stocks.
Yes, that one must come first. Then only good price.
Yeah, cannot jump the queue lah. Cannot jump the gun. Okay.
A lot of people try to do the price first, then only find out the stock. No, it doesn't work that way.
The cheap price can go cheaper.
Yes. True.
The company is not strong. Okay.
Yes.
Yeah. Before we go to the next one, wait, let me just do a poll.
Do a poll,
All right. So now, or quiz lah, huh? So on your screen now, I'm launching this. Hang on, can you see this? Okay, just give me a minute. I think I need to. I can launch the poll if I'm not the presenter. So I will need to make myself a presenter first. Okay, you know what? Let's skip this poll for a minute. Why don't we just proceed for a minute?
Oh, okay. What am I going to talk about?
Go to the next slide.
Okay, I'm going to move on to the next slide. So let's see what I prepared for you guys. Okay, so basically, number one, we talk about good stocks, right? That means to say the stocks must grow profits consistently. So that's number one. Number two, must always find it at the lowest possible price. So this slide is actually about finding when these good stocks are trading at their lowest possible price. So that's the most important thing right now. Okay. So before I talk about before we talk about technical analysis, we go and talk about the fancy tools. Basically, number one, when it comes to assessing stock price performance, all right, we must understand that stock prices move in trends, all right, and basically there are only three possible trends when it comes to stock prices. The first one is actually an uptrend. So uptrend is very simple lah. It's when stock price, then a stock actually moves up in price in general. All right, this means to say there are more buyers in the market for this stock than the amount of sellers in the market. So that's an uptrend. Second one is downtrend. Downtrend is the opposite of the uptrend, meaning to say the stock price is actually moving downwards in general, where there are more sellers of the stock in the stock market than the amount of buyers in the stock market. Okay, so that's a downtrend. And the third one is actually the sideways trend, where I've actually just mentioned, where there are equal amount of buyers of the stock, all right, equal amount of buyers to the amount of sellers of the stock in the stock market. Meaning to say that the entire, as a whole, as a collective whole, the stock market doesn't know whether or not this stock should go up or should come down. All right, so it's a 50-50 game. Stock price moves sideways in general, correct? Okay, so these are the three price trends that we need to keep in mind: uptrend, downtrend, sideways trend. Now, stock prices, right, they will be trading at their reasonable low. All right, reasonably lah, not accurately lah, just reasonable lah. Okay, because we don't want to. The worst thing about trading is this, or investing, is to buy the stock right at its peak. That means you say, if the peak is $20, that means you say, wow, this is like all-time high, and it's at $20. That is the time that we want to avoid buying into lah.
Yeah.
Because we want to buy anything substantially lower than $20. All right, that's a metaphor. Okay, so the stock price, right, when are they reasonably low? There are three possible situations. So I'm going to explain to you right now. The first one is this. So the stock price move on an uptrend, right? So it's always, so the stock price, the most ideal time to get in is always at the beginning of an uptrend. It's always, it's logical, right? So you just visualize there's a stock chart going up. I believe they can see my hand, right?
Yes,
can. Okay, I'm going to use my hand movement. This is very handy. So stock price moving upwards, right? So it's always at the beginning of the uptrend. So this is actually the ideal time to actually come in, right? So that's the first condition. The second one is at the end of a downtrend. So now there's a downtrend, right? So if let's say this is the end of the downtrend, then of course will be the most ideal time to get in. All right, that's the second one. The third one is this. The third one is when the side trend, okay? Now, what if the stock price moves side trend, right? How do I know whether it will go up or come down? So it's very simple. So if let's say this is a side trend, I will look at what is the stock price trend before the side trend.
Okay, yeah.
So if let's say if the stock price is actually moving at a downtrend, like that, and then it moves on the sideways trend, that means you say the downtrend has actually like slowed down, and then it's kind of like flattish, and then it's moving on the sideways trend. Most likely it may go up.
Most likely you go up lah.
Most likely lah.
Okay.
Most likely, if it's a good stock lah, most likely.
Okay.
Now, if it's moving on the uptrend, and then the uptrend is like slowing down, and then it's like cannot go up already, and then it come up a little bit, but then it come down, and then it started to move on the side trend, most likely it may come down. Chances are lah. It's not an absolute truth, but it's an observation over a long period of time.
Like how many samples have you observed before you come to this conclusion?
Wow, you may want to look at hundreds lah. You may want to look at hundreds of stock price trend lah. So that is the end product of my years of observation lah.
Okay.
All right. So it's an observation. That means you say this particular theory, you may want to actually do an experiment with me, where you also do the same thing, and let's see whether what I say is true or not lah. Okay. So let's move on. When it comes to trading, it's always about observation, experiment, and it's an art. It's not an absolute truth. So if you are looking for a trading course, right, and this trader say, wow, sure can make money one, 10 out of 10 times I'm correct, right? That one it may be either a scam or a con job lah, because no one actually got it like 100% correct. All right, it's an art, and it's the love of sharing. That's why we are here.
Yeah.
And of course, how do we determine? Now I'm gonna go back a bit. Just now I talked about the uptrend, downtrend, and sideways trend, right? So the key question is, how do we know? How do we know whether the stock price trend, if let's say it's an uptrend, right, it's at the beginning of the uptrend or already at the end of the uptrend?
Yeah.
We won't know, right?
That's a good question.
The timing of the trend. If it's actually at a downtrend, so at what stage is it? Is it at the beginning stage, mid stage, or end stage? All right. So these are the questions that investors want to know. Because if it's at the uptrend, if it's at the beginning, you may want to buy. Because if it's at the midterm, that means it has risen a bit and you've already bought, then maybe you want to hold. If it's actually going up way too high already, and you say, wow, this stock is ridiculous, the stock price is appreciated like crazy, man, maybe you want to sell. Okay, so the identification of these trends, there are many. Technical analysis, right, is an art, and there are a lot of tools available, probably hundreds of them. No one is a master of every single one of them. Some traders, the ones that I know, they may master like 3 to 4 or 5 to 8. I do not know. All right, nobody masters them all. All right, everyone just pick one or two that they like or they think that they are capable of mastering, and then they just master it. All right, it's not Chinese kung fu. It's like it's something like Muay Thai like that. There's only 3 punches.
Yeah.
The jab, the cross, and the uppercut, but they perfect it like xiao.
Yeah. I think I remember what Bruce Lee said. Bruce Lee.
Yeah.
You know Bruce Lee? So I think he said that I fear not the person who have mastered 10,000 kicks, but I fear the person who have mastered one kick 10,000 times. Wow.
Correct.
So that sums up the thing.
Yes, that sums up the thing. Thank you, Bruce Lee. We'll remember you. Okay, and the technique that I'm going to share with you is called the SMA Crossover Method. Now, in order to understand the SMA Crossover Method, I'm going to break it down into a few components. The first one is the objective, why we use this tool. All right, so this tool is to identify price trend, and more importantly, the timing of the price trend. So that's the objective. Keep that in mind. Okay, and now secondly, what I would like to share with you is the definition. So simple moving average. Okay, so it's called the SMA. It's the abbreviation of simple moving average. Correct lah. All right, SMA. So I'm gonna start off by sharing the A first, then only the M, then only the S.
Okay, so you reverse the order.
I reverse the order a bit for your understanding lah.
Yeah.
Okay, why is it an average? Because this actually is an analysis of the stock price movement, and how they do it is this: they will calculate the stock prices, all right, of a certain period, all right. Let's say for example 40 days, all right. So you may wonder what is SMA 40, which means let's say today is what day is today?
Today is Tuesday.
Tuesday date. September 4th, right?
4th, yeah.
Yes, September 4th, right? So they will backdate the 40 latest stock price. That means from the 4th, because trading time over, right? So we'll take the 4th, the 3rd, the 2nd, the 1st, and then backdate it to...
Yeah, but the 2nd and 1st is not a trading day because it's weekend.
Yeah, so we have to exclude that.
Yeah, we can exclude the weekend non-trading days.
Yes, so 40 trading days,
yeah,
backdate it. We will add this 40 trading days, and then we will divide it by 40.
Okay, so take the summation of all the price and then divide
by 40.
By 40. All right.
So that's why there's this component called average.
Average.
Okay, just keep that in mind first. Don't worry, I'll do a demo. You will see very clearly how it works. And now we look at moving.
Moving, yes.
So why is it moving? Because every day the stock price will move on. Like for example, tomorrow is a working day, right? It's a trading day.
Yeah.
So that means there are new data coming out on a daily basis, right? All right. Let's say this one, I'm gonna keep it to daily lah. Okay. We are gonna put it in. We are gonna present it in the context of a day, a trading day. So 5th September comes in. All right. So we will have to include the 5th September stock price, and then we have to exclude the 40th, the previous 40th day. We have to turn down keluar. We have to like eliminate it. All right. So it's always on the moving.
Yeah, the furthest away lah. Huh?
Yeah. So it's like 4th, the 40th day ago.
Yeah.
The 5th, and then like this. It's always on this.
Okay.
Okay. So that's why
so you just take the recent 40 trading days data.
Yes. So it's always moving.
Okay.
It's never fixate. So and then finally, simple. So why is it simple?
Yeah, why is it simple?
Because number one, the calculation is simple. Number two,
oh, I see.
number two, but more importantly, the weightage of each stock price. Let me say the first day and the 40th day, right? We treat all these stocks as equal weightage. Okay, what do I mean by that? Later we'll discover. All right, because in Bursa Marketplace, there's also another tool known as the exponential moving average.
Okay, it's called EMA.
EMA.
Yeah.
So why is it called E? Because what they do is the first day and the 40 day, they say that the most recent data is actually more useful than the 40 days ago data. So they put a lot of weightage here, and then they have lesser weightage here. So therefore, the calculation is a bit more complicated lah. But the overall theory is this data holds more weight, so therefore it will be given more consideration lah. That's called the EMA, which is a shorter trend kind of technical analysis tool. But in order to use EMA, you must first understand SMA. Now, I'm gonna actually give you a short demo on how this SMA is calculated. Okay. So with that, I need a laptop.
Sure. But could you tell us what is crossover?
Crossover is the part that I will need to explain this first. Cool.
Yeah.
Do the demo first. Then
so
only
you need to do demo, right?
Yeah, I need to do demo.
Let me make this laptop presenter first.
Yes. Meanwhile, I have my coffee.
I seem to have a little bit of challenge.
The crossover part, right, will only be, it's better that I explain to you when I open up the Bursa Marketplace website. From there, we can actually assess the stock price together, and then from there, we can actually, we can actually discover what the crossover actually means.
Okay, can you just give me a minute? Let me.
Oh yes, of course. Meanwhile, if you have any sort of questions or if you have any comments and feedback, there is a chat box for you to actually voice your comment, right? So you may take some time to digest and see whether you have any questions, and of course later on we will feedback to you. We would like to attend to them.
Thank you very much for that.
No problem, Shane.
Alright, I think, would you be able to do the demo from that?
Yes, of course.
Alright, so
Will they see my face really big?
Okay, you're gonna see your face really big now.
So you have to tell me when exactly I should move to the...
Give me a minute. Okay, cool.
Alright, they are seeing you lah, I suppose.
So, why don't we just use, could you move over there?
Yes, I'm gonna move up close so that you can see me much clearer. So now, alright, hello everyone. Now I'm gonna do a short demo.
Yeah, I think they are seeing the screen now. Let me hide this.
Okay, so now they're not seeing my face lah.
Yeah, they're still seeing your face.
They're still seeing my face. Okay. So first of all, I need to get into...
Can you speak louder?
Yeah, of course. Because the mic is actually behind me, right?
Yes, you're right.
So now I need to go to my own email account, right? Do I need to get into my own email account or?
You want to use Bursa Marketplace, right? Am I right?
I need the spreadsheet first, then only I use the Bursa Marketplace. I think we just use us. I actually email the spreadsheet to you already.
You use your email account.
Okay, so give me a moment. For this is actually very important.
Alright, I see your screen there. You are logging in now.
Into my own email account lah. So they will see my email lah. Tons of junk inside here. Right, just 1 second. So this I don't need. Actually, a lot of effort just for a short demo like this. Okay, so can you see the Google spreadsheet here? So I'm going to demonstrate to you guys how the SMA is being calculated. Okay, so here I have actually put in very basic, very simply the stock price. Okay, so this is just an illustration of the calculation of SMA for your understanding. Now, here I have two, which is the SMA 5 and SMA 10. So when I say SMA 5, it simply means that it is actually the abbreviation of simple moving average 5 days. Okay, and if it's the SMA 10, it's 10 days. Okay, so I'm going to start off with the 5 days. Okay, so how is it calculated? Now, let's say this is 1, 2, 3, 4, 5, correct? So I'm going to just put here sum. It is the summation of the 5 latest trading day, and then you just divide it by 5. Okay, so the SMA 5 is
I think I need to do a bit of adjustment. Because they are not. I think the screen showing is a little bit.
Okay.
Okay.
So
can you go ahead?
Yes, of course. All right. So as you can see, when there's the latest data coming in, let's say this. So now you see here it is C4, which is this, to C8. Now it's C5 to C9. So as you can see, the calculation is number one, simple. Number two, it moves. And number three, the averages move. All right. So I'm going to just complete the calculation of SMA5 as followed. And when it comes to SMA10, it's very simple. You get the summation of C3 and C10. No, it is actually C12. And there you go, you have 10. Yep, correct. And as a new stock data comes in, we will have a new SMA 10 and SMA 5 figure. Now, if I'm going to add one more, let's say 1.15, then of course the two figures will actually differ. So by now, I hope that you have actually understand how the simple moving average is being calculated. Now, moving on, I'm going to show you a sample of 4 stocks. A, B, C, and D, okay, as shown on the screen. Now these are real stocks, all right, that I have picked from where their figures are. These are all shareholders earnings figures, and I pluck it from their annual reports. Now take a close look at these 4 stocks, A, B, C, and D. Now here I would like to actually ask a very simple question. From these 4 stocks, okay, which one has the best fundamental quality just based on this particular chart? A, B, C, or D? Just take a short moment, a brief moment of 1 or 2 just to look. And of course, if you have an answer, just put it in the chat box. So Junxian, do we have any respondents?
Alright, so my laptop got a bit of challenge, so I have to come here to see if there's any question here.
Okay, yeah. We have stock A. We have stock A, C. Okay. A. Okay, A. Okay, I believe most of the answer is A, which is correct. One says B, one says C, and one says, there's none who says D. Okay, very good. So I believe my answer is the same as yours. The answer is actually A, because why? Remember I talked about the what is a good investment, where a good investment has 2 components, good stock and good price. So good stock means to say it's a stock that grows profit consistently. So the one that is closest to this description is actually stock A. And of course, when it comes to stock B, if you see here, the stock price actually, the stock earnings actually grow here, but you experience a decline here, and then it started to grow here. So this is actually not consistent growth. All right, this is more like cyclical. Okay, so that is stock B. Now stock C, it grows until year 2013, and then after that it kind of like falter. All right, so this is an example of a stock where the stock price has actually declined. And stock D is actually the kind of stock where it's not making money. Okay, it's as simple as that. So I'm going to review to you the 4 stocks, their names. So let's make a guess. All right, Junxian, you want to make a guess?
Yeah.
Stock A looks like what kind of stock?
Hang on, I need to come closer because I can't see.
Make a guess.
Yeah. Why don't you just review it?
Oh no. We must give the honor to you. You just make a guess. Quick guess.
Company name.
Company name. It's a real stock.
Okay. Really can't tell.
Really can't tell.
Uh-huh.
Okay, I'm just gonna reset it. It's actually Maybank.
Wow.
Then stock B is actually AirAsia. Stock C is Amway. Stock D is Berjaya Media, your Sun newspaper. Okay?
That's interesting.
Interesting, huh?
Yeah.
All right. So basically, the kind of stocks that we will do the SMA Crossover Method is actually stock A. So that is actually very, very important. Now, from here, can I actually go back to my own slides?
Yes, you may.
I may, huh? Okay. Just give me a moment.
Yeah, just
Okay.
Which slide is it? Was it?
Okay, so this was the previous slide. I just need to make a quick, uh, how would I say?
You're at your slide now.
I'm at my slides. Okay, very important. Now we are going to talk about duration of price trade. Because I have to do the demo later.
Oh, you have to do the demo later. Okay?
Never mind, I'm already back at my seat. So
Yeah.
we are moving the mic over.
Yeah.
And yeah, now at least you can see me from a distance lah. All right. I'm also loving you guys from a distance as well lah.
Yeah.
Okay. So let's talk about the duration of price trend. When it comes to trading, the duration is very important. Okay, because when they say they are traders, right, it doesn't mean that everyone trades the same thing, or everyone says that whatever they say, it doesn't mean the same thing. All right, that's what I want to say. So here I'm gonna just give you a brief introduction about the duration of trading. The first one is actually called super long term. So super long term, I won't consider that as trading lah. It's actually more for investors, for people like me, whereby what we want to do is actually to buy a good stock and keep it like forever lah. All right, because we treat our stocks like assets that where it contributes income regularly until we grow old lah. All right, until selama-lamanya lah. That's the key thing. All right, like forever. So in this case, right, we will actually use actually a tool which is known as the SMA 200 line. So 200 means 200-day average lah. So it's very, very long term. Now, mid to long term is also something that I personally use, all right, because it is actually used to identify the mid to long term stock price trend, but it's actually shorter than the super long term that I've actually mentioned above. So here, that's why the SMA is a bit shorter, as you can see, 40 days, 50 days, and 100
So it's
days.
looking at 3 to 5 years lah.
3 to 5 years lah.
Duration.
Correct. So the whole idea about if you use any of the two, right, which I'm going to demonstrate later, we will actually use that kind of tool lah, SMA 40, 50, and 100 for the midterm, and then for the long term is 200. Now, anything below, like for example, short-term trading, okay? Short-term trading could mean a lot of things. Like for example, milliseconds, or a few seconds, a few minutes, or a few hours. All right, these are called intraday trading. Like people who buy at 9 a.m. and then they close their position at 3 p.m. That one that keeps buying and selling, that one is intraday. All right, some people, they buy on Monday, then they sell on Friday. All right, some of these people are known as swing traders. All right, where they are very short term in their position, but a little bit longer than day traders. All right, so anything related to that is called short-term trading. And when it comes to short-term trading, they will use their preferred tools. There are 200s, over 200 plus lah. I do not know, maybe 300, who knows, right? So they may use a combination of sophisticated tools lah. All right, like for example, we got MACD, which is moving average convergence divergence. That one is another day lah. That one I also don't use lah. Bollinger Bands, stochastics, relative strength index, RSIs, etc.
Yeah, and many more lah. There
many
are
more
thousands of indicators available today.
But it doesn't mean that you use these tools, right, you can make money.
Yeah.
All right. Some of these people use these tools and still lose money. So it doesn't mean that you hear some sophisticated tools, wow, these people can make money. Not really. All right. There are always winners and losers in the market, no matter how sophisticated they are. That's why Warren Buffett, he don't need to know so many things. He just read companies' report, still make money. All right. So that is the idea lah. Oh, where's my remote control? Now let's see what I prepared for the next slide. It's time for demo.
Yes, time for demo.
So now I'm gonna do two different demos. Actually, demo one is actually the SMA 200 line. Now I'm gonna repeat the objective of this demo. The first one is this one. We are gonna identify the long-term stock price trend. And then I'm going to identify the beginning of an uptrend, the middle part of the uptrend, and the end of an uptrend, and the same for a downtrend, okay, using the SMA 200 line. Now, the second demo, all right, because it's concurrent lah, all right, I'm going to use the SMA 40 100 line. This one is the middle, this one is the mid to long term price trend. It's the same objective, all right, but a different twist. It's a shorter term. So I'm going to explain how you can actually use these tools. And these tools, by the way, thank you so much, Bursa Marketplace. Whoever is actually doing this, fantastic. You guys have actually created a free tool for all of us to actually use. And right now I'm going to demonstrate to all of you here how to use this free tool. Now let's go and do the demo.
Please go ahead.
Let me get my coffee first.
Alright, just give me a minute. Alright, here you can open a new tab.
Let's open a new tab.
Okay. Alright.
Okay, so since just now over here we talk about Maybank, right? So therefore I'm gonna use Maybank as my case study. Okay, let's see. Bursa Marketplace. Let's do a demo. Okay, so this is the homepage of Bursa Marketplace. As you can see, they have just revamped their layout of the website. Plenty of things to see. But I think the most useful part of the website is this button, which is called search button, and just do MBB and you will find Maybank. So let's just click onto Maybank. Okay, so now the question is Maybank, if let's say lah, all right, first and foremost, do your fundamental analysis, check Maybank whether it's a good bank or not. Once you have ascertained the quality of the bank and you like Maybank, now it's time to assess the deal in terms of SMA Crossover Method. Okay, now let's see whether 999, the stock price 999, is this what? It's not enough to tell from the stock price itself, so that's why we always want to identify trends. Now, as you can see, we have home profile charts, financials, and blah blah, and so on and so forth. Not blah blah blah. I'm gonna just click on the charts, and okay, as you can see, by default they will give you a chart which is a little bit more than a year. Okay, so don't worry about that. They have a volume chart here. Now, click onto technical indicators. As you can see, we have the simple moving averages, and we have the MACD here. I'm going to just remove the MACD. And I'm going to start off my demo with the longest term, which is the 200 days one. So I'm just going to click onto this. Okay, so this is actually not enough to tell. Oh, let's see. Okay, in order to lengthen the chart, there is a mini chart over here. So you may just want to drag the chart across like this. And I'm gonna just move myself upwards. And there you go, okay? So this is actually the stock price, which is represented with the blue line. And we have the SMA 200-day line, which is represented by the black line. Okay, so what does it mean? Now, can you see that when the stock price is moving upwards, guess where the black line is moving? All right, watch. The black line is always moving the stock price. Sorry, let's start with the blue line. Okay, the blue line is always moving above the black line, right? So when the actual stock price is actually moving upwards, the blue is always on top of the black. Okay, so in that sense, you may confirm that based on this alone, the stock price is moving on the uptrend. Now, if you look at this part here where the stock price has actually fallen, you may find that the black line was moving on top of the blue line, right? As demonstrated, as projected on the screen. And finally, when the blue line is actually above the black line, is moving back on top, is moving back into the uptrend. Okay, it's actually very simple. Okay, so now when do we know that there is a change in price trend from uptrend to downtrend? It's very simple. So this is where the definition of crossover comes in. So as you can see here, all right, we have an uptrend over here, and suddenly the black line, right, initially it was at the bottom of the blue line. Suddenly it actually moved on top of the blue line. The black line moved on top of the what? All right, let's do it again. Initially the black line moved below the blue line. Now the black line moved on top of the blue line. Yeah, correct. Okay, and this is actually the crossover. All right, so when people look at this, when people see this, they will say, okay, look, it's time to sell based on this indicator alone. Okay, now when do we actually ascertain that there's a change in price trend from a downtrend to an uptrend? It's very simple. All right, just look at this chart here. So over here the price has been dropping, but the black line is always moving on top of the blue line, so therefore it's always on a downtrend until here. Can you see this? This is very clearly a crossover, and once these two lines are moving on top, then you can confirm that this is actually an uptrend until this point lah. Until this point, as you can see, they intertwine with one another. Then it's a bit hard to be ascertain whether this is a uptrend or a downtrend. Okay, so this is how you use the SMA 200. All right, it's very simple. Just one click of a button and you can actually ascertain it. Now I'm going to move on to demo number 2, which is the 40 and the 100 line. Okay, some of you may ask, why don't we use 50 days? You can also use the 50 days. Okay, no problem. All right, the effects, the results will be more or less the same. Okay, so it's your preference. Again, once I change the indicators, you may want to redirect the stock price chart as shown on the screen. Okay, I'm just going to stop here. All right, as you can see now, because we have actually used the shorter SMA, therefore there are more indicators of uptrends and downtrends where they are more shorter. So let's take a look. Now, how do we confirm an uptrend? Very simple. If you look at the okay, let's start with identifying the colors. The blue one is actually the actual stock price. The 40-day SMA is represented by the black line, and the 100-day SMA is represented by the green line. Okay, so as long as the stock price, if you notice, if the stock price is moving upwards, the black line, which is the 40-day line, is always moving on top of the green line. That is how you identify an uptrend. Now, when stock prices are coming down, as shown on the screen here, like the mid section of the stock price trend, the green line is always moving on top of the black line. Okay, and of course, when Maybank is moving upwards like this, then what we see here is the black line is moving on top of the green line. So where is the crossover? Very simple. So over here, let's say you buy here. So what happened is that the black line is moving on top of the green line, and it continues to move all the way here, and there you go, a crossover. And this crossover has actually been prolonged. So what happened here is that if a person who masters the SMA crossover method, they might actually sell over here. All right, so once they sell, they will hold their capital and they just wait lah. All right, so as you can see, wait for the developments. There's no clear-cut uptrend in sight, and suddenly the price actually dropped. So the green line actually dropped. The green line actually moved on top of the black line, and the stock price continued to fall. as shown on the screen. So let's say we follow the story, stock price here is still not yet the bottom because the green line is still above the black line until this particular point. Now, here's another crossover. So what makes this crossover different from the rest of the crossover is actually very simple. So once we actually see this crossover, we may want to test a little bit, see whether the three lines are actually moving in unison and whether the blue line, the black line, and the green line will actually eventually move upwards as shown on the screen. So once it is, then you may confirm your purchase and then you can actually enjoy the ride as shown on the screen. Okay, so this is actually how you use the SMA 40 and 100 line, where the crossover is reliant on the 40 and the 100. Just now the 200 one is the 200 and the actual stock price. The 40 and the 100-day one is the 40 and the 100-day one. That's the crossover. Okay, so that is how you use the two crossover techniques. Okay, now I'm going to move back to my screen right now. So I click this, go to dashboard, right?
Screen, is it?
Yeah.
Yeah. Yes, this is your screen.
Okay, so do I speak from here?
No, just go back.
My goodness. Okay. All right, so I'm back here from a distance again, and let's move on to the next. Oh, let's see. I press this button.
Okay. Just give me a minute. All right. Yeah, it's moving.
Okay, so now I have actually demonstrated how SMA is being calculated. Now I'm going to share with you an overall investment game plan, which I personally use. It's very simple. All right, let's say, for example, let's imagine today you have no knowledge or no prior experience in stock investing. How do I do? How do I start? Where do I start? Here's how you can actually start. All right. First of all, just find 10 to 15 good stocks. Don't look at stock price. Look at company annual reports. Look at them. Look at the financial records. Make sure that these stocks, right, that you pick are the ones that grow profits consistently. That's number one.
Must grow profit consistently.
Consistent.
All right.
If it's not consistent, if the profits are inconsistent, then your returns will be very inconsistent lah. True. Okay. So always make sure the consistency. That's the key word lah. Consistency. Without that, your return on investment is like a yo-yo lah. All right. Tak tentu arah. So the next point here is PE ratio. Calculate the PE ratio. So I believe that we have done quite a number of financial webinars, right?
Yeah, but never mind. Just briefly remind the audience what is PE ratio.
PE ratio is very simple. Okay, it's called price to earnings ratio. So that means to say if the stock price is 10 ringgit, like Maybank 10 ringgit, and if let's say Maybank is earning $1, let's assume lah. Of course, it's not the case for Maybank. And you take 10 divide by 1, 10 the stock price divide by 1 ringgit the earnings, therefore you get PE ratio of 10. Okay, what does that mean? That means say for every dollar the stock is earning, you're willing to invest 10 ringgit into that particular stock. Okay, and therefore your return should be 10%. Now, if you buy a stock at a high PE ratio, let's say 30, then of course your return will be lower. So the most ideal case is to buy when the PE ratio is low.
So when PE ratio is low, that means that the share price is cheap.
Yes.
Yeah.
That's one way to look at it. Okay.
Alright.
Now, of course, how do I say? The third one is actually very important. If you, like me, want to earn some dividends, because why dividends? Because dividends actually, number one, it gives you a very steady passive income. So this passive income, you got choice. It gives you a choice. Number one, you can actually spend it. All right, you can actually pay bills with it. So that's number one. Number two, you can take the same dividends and put it back into your portfolio to build your portfolio. All right. So some people say I invest for capital gain. So do I. Who doesn't want to invest for capital gain?
Yeah.
But the thing is, if you invest too much on capital gain, you are just hoping that the stock will actually use the cash that it has to actually grow by itself. So you lack the flexibility in terms of how you want to design your portfolio, because once you invest into the stock, then it's up to the stock to see whether it can grow or not. But if you actually have some dividend paying stocks, you invest the money into it, it spits out some cash to you. You can take the same cash and you can either buy back the stock, or you can actually go into another stock. You can actually put that into another dividend paying stocks. Okay? So dividend yield, if you're not so interested in dividend, I would still recommend you to go something above the FD rates lah. All right, because if you're taking risk you are risking your capital to invest, right? So you might as well just go for something that is paying a little bit higher. All right, so if you're not taking risk, put your money in the bank. The FD rates I think is giving about 3.2 to 3.5%. So go for anything above that. That's the first thing that you can do. Number one. Okay, now once you have 10 to 15 stocks selected, put that in your portfolio, and then you can actually choose any of the two tools, the SMA 200 or the combination 40-100 tool or the 50-100 tool, whichever you prefer. All right, practice them. Practice, okay? For it makes perfect. Your acumen will be sharper after prolonged practice. Even if you don't buy anything, practice, okay? You still become smarter at the end of the day. All right? But make sure the whole mindset is this: whenever you buy into a stock, make sure that you are seeing yourself as a part owner of a company. Don't see yourself as a gambler.
Treat yourself as a partner, like a shareholder to the company.
Like I know some of you may just invest maybe a few $1,000s, but treat yourself as, hey, I'm investing this few $1,000s into a legit business lah that is really making money. If you see yourself that way, I'm very sure that your journey as a profitable investor will be sustainably long.
Yeah, instead of taking it as a casino.
Yes, if it's a casino, of course, like most casino visitors, they go in and come out, then bye-bye. See you next year, right? So there's no point. We are here because we want to grow our wealth. All right? And of course, I have actually spoken about this a little bit earlier. Practice, okay? Very important. So here I'm going to give you a recap. If it's an uptrend, if the uptrend is early, buy. If the uptrend is at its end or tail end, you can sell or you can hold. Up to you, all right? If you hold and the price drop, you can consider buying more, all right? If it's a good stock. Don't buy the stock if the finances are actually really bad, okay? Because very rarely it will rebound. So anyway, if let's say you have no confidence, low confidence, you don't want to take the step, please don't go and trade. Please don't go and make your first trade or invest, because there's no such a thing called the deal of the century in the stock market. There are always good deals around. All right, so if you're not ready, please don't put your money into work and put your money into the stock market. All right, it's best to be sure about the investment before making it. Okay, understand the risks and rewards that is involved before going into it. Not sure, don't buy. If you're sure, buy or sell. Do whatever you feel is best for you. So with that, I think we can go into Q&A. Thank you so much, Shane.
Sure. Thank you for your wonderful sharing. Let me just launch a poll if it works now. Just give me a minute. So now on your screen, there's a poll that asks for your opinion.
Yes.
Like, do you often rely on moving average in your trading? Yes, sometimes, and not at all. So, all right, I'm collecting some polls now. In the meantime, if you answer the poll, please click into the question and answer question box to let us know what question you have, and we will address them as many as possible.
Sure.
Okay, yeah. Let me give you another 15 seconds to fill up the poll. And in the meantime, please write down any question that you have for Ian.
Yes, of course.
All right, let me close the poll now and share with you the results. So on your screen, you see that. So there are 46% of you who say yes, you rely on moving average in your trading. 30% of you say sometimes, and then the 24% of you do not use moving average at all. So that is the poll for today. And let me go back to for the questions. So just give me a minute. Let me glance through the question now. So now the first question is, what is the recommended startup capital for beginners to get started?
Oh, there's no recommended amount. Personally, I started below. I started buying my first stock actually below 1,000 ringgit.
Oh wow!
So I started very small,
Yeah,
right? Actually, you can start very small and build up your confidence from there. Now, if you just want to solely invest in Malaysia, because I do buy Malaysian and as well as Singapore stocks. So if it's purely on Malaysia, and let's say you have a lot of money but you have no experience in the stock market or whatsoever, what I recommend you to do is this. Whatever amount that you set aside, put that in some FD first. Take, let's say, I don't know, maybe $3,000 to $5,000. Build a minuscule portfolio. Means to say it's like a prototype of what you intend to build for the future. All right, and you take the 3,000 to 5,000. All right, or if you have a little bit more money, 5,000 to 10,000, build the whole concept is to build a prototype first, because you got no experience, you got no confidence of what you are getting into. So you might as well take a small amount of capital, just gain some experience first. Buy your first share. All right. And by the way, if you are going into 10,000, split it into 5 different stocks, like 2,000 each. Or if you are into $5,000 in startup capital, 1,000 each. Or maybe just buy 1,500 for each stock, or just split the 5,000 into 3 stocks lah. All right. Buy your first stock first, and make sure you get the whole process here is not so much about how much you're going to gain, but it's more about familiarizing the tools that are being provided by Bursa Marketplace, the stock brokerage tools, the tools that are given by these brokers. All right, familiarize yourself with the investment process from researching. That means to say, from reading company reports to looking to actually practicing whatever I've just preached, which is the SMA 200 or the SMA 40 or 100 line. Once you have done that, buy the stocks. And of course, what I recommend you to do is start off with something that pays dividends first, because nothing is more rewarding than you receiving your dividends in your bank account. Okay, so once you've got the dividends in your bank account, say, hey, I got some money in the bank account. At least you can make back a little bit of your stock brokerage fees. Then go out and celebrate with that amount. Then because why, you deserve a little bit of pat in the back lah, some reward lah. Go for makan. And once you have done that, come back with the same research, and then if this whole thing is working, then you can scale your portfolio bit by bit. Okay, but of course, if let's say this prototype is not working, then your risk is probably I wouldn't say 10,000, because it's very hard for you to lose 10,000, the full 10,000. All right, in stocks. Although yes, theoretically, some stocks, some companies may go bankrupt or what, the value of the stock can drop into zero, but it's very rare lah. All right, there's still a little bit of value into it lah, even the worst kind of companies in the stock market today.
Yeah.
Start small. You can build it up later. Don't worry.
Yeah, sure. All right. So the next question, you have. Yeah, appreciate Ian if you can keep the answer brief and concise.
Sorry.
Because there are a number of questions more. So the question is, which moving average do you think is more useful for intraday trading? Is it the EMA or the SMA?
EMA, but I do not
So you
know.
feel
I'm
it's
not.
the EMA lah.
I feel it's EMA because it gives more weightage to the latest price trend. But then it's actually not even EMA. Because if it's intraday trading, that means say you're buying at 9 a.m. and selling at 3 p.m., you probably won't use any of the two. You probably use something better.
Okay, from my experience seeing intraday trader, they will look at the naked charts. Okay, and just look at the candlestick.
Yeah.
And look at the queue, like which are the best buy and which are the best sell, which one have the most order queue at that price, and then make a judgment there. Yeah, so that's from my experience now.
Okay.
All right. So the next question is, if the volume of the stock counter is low, would SMA method still be relevant?
Volume of the stock low. It depends. Case by case. It's very hard to say. Because I am primarily an investor, not really a trader.
Okay.
I only trade to get discounts. All right, that's the whole objective of the game. All right, so I'm not here to say buy here, sell there, and then try to make a short-term profit, because I don't operate that way. I'm always, okay, this is a discount, it pays 5 to 6% dividends. Okay, I'll buy. If it drops further, I may buy more to get dividends. All right, because I'm more interested in the ownership of the stock.
Yeah.
Yes, than just to get a small capital gains or trading gains from the stock. Just treat it as like, why do you rear cow? Do you want it for its meat, or do you want it for its milk? So we are talking about two different types of languages. All right, next question lah.
Okay, the next question is, was there any back testing done on a simple moving average on how high is the accuracy in spotting good turnaround stocks?
Back testing.
Yeah, do you do back testing on your techniques?
Back testing, not so much about back testing, okay? Because like I said, number one, this is not a fail-proof method. I would say the accuracy, because this method, right, is I did not like invent this particular tool, okay? All right, the origins about this, right, is actually I read a book written by Adam Khoo, and then I look at how he present it, then I just test it out using Bursa Marketplace, and then that's how I practice, and that's how I gain some insights about how to use this method. Okay, so what I could remember from the materials, not to say that Adam Khoo has written about it, but it's just something that I remember, I can recall. Probably the accuracy is around 60 to 70% lah. But it depends also how you actually do it. It's very subjective, this one. You see, it depends on the selection of the stock that you choose. You choose the wrong one, you practice the SMA crossover method then of course you're not getting the intended results anyway. All right, so you must find good stocks first, then only you do the testing. But since we talk about testing, I would like you to also, if you may, and if you have the interest, you might as well do the testing with us. I mean, take 6 months from today, practice and see what are the results.
All right. Yeah. So the next question is, how to know if the uptrend is early or the downtrend is at the end?
Oh, it's very simple. Like just now, the Maybank case, right? All right. Should I go back to the MacBook Air and no need lah?
Yeah, no need.
Okay. Just now, okay, they can see my face, right? Just
yes,
now,
they can see you.
This is Maybank stock price. Okay, this represented by my left hand, and then this is the SMA 200. So if the 200 line, which is this, is moving below the stock price, then it's an uptrend. So anything that is signifying the start, right, is you just trace it back, and then you will find out this is actually the initial stage lah. The end is always like when the blue line crosses below the black line like this, then you know that's the end already lah.
Okay, now the next question is, how do I know that which type of SMA to use? Is it which parameter to use at what situation? 40, 100, 200?
Okay, for start, if you want to keep it simple, use the 200. Use the super long term.
Super long term, that means they have to really think long term, like anything more than 5 years.
Yes, buy and keep forever, like how you buy property.
Yeah, precisely.
Use that. Use that first. No guarantee that it's success, but definitely I won't guarantee anything, but what I can say is this: it helps you to. It will actually prevent you from making the worst kind of investment decision or move in the stock market. It avoids you from buying high and eventually selling at the lowest.
Okay. All right. So can this technique, next question, be applicable in other instruments such as FCPO and FKLI? So that's the question.
Yes, of course you can do that. I mean,
so long that there's a chart. I mean,
so long that it's a chart.
All right. And are you aware of any particular sector or stock that this SMA crossover method is especially effective? Like got 90% accuracy. Have you ever encountered like one stock that you do more than 9 out of 10 is accurate?
You have to depends on what stock, okay? But what I can say is this.
You have not encountered.
I will add my answer to this question. For me, I like to compare these two things. These two things is very interesting. Number one, I use the 10-year stock earnings. That means the shareholders' earnings. All right. From the shareholders' earnings, you draw a graph, and then you take the graph, you compare it with the stock price performance over the long term. You put them side by side, right? Most of the stocks that have grown profits consistently, like for example, Public Bank, all right, LPI, Panasonic, and stuff like that, their stock price is always
it will mirror.
It will be a mirror to its earnings.
Okay, the stock price will often mirror the earnings growth of the company for good quality stocks. That's what your research has uncovered.
Yes.
Right.
Correct.
So the next question is, do you know of any free screener that can screen consistent profit or low PE over 5 years and above?
Any screener? Okay. Of course, there are many screeners out there. You can use, I wouldn't say the KLSE screener. All right, that's one of the more popular screeners. You can actually try it out. And of course,
KLSE screener,
or who's one already? I'm not too sure whether Equities Tracker got or not, but it seems to me a little bit complicated. I mean to say, I'm just speaking from my own personal experience. Maybe they have Equities Tracker. Of course, my myBazaarKing.com.my, I do compile all kinds of data. And who else? There's this Share Investor. Share Investor could These are the few places that I think
will provide a screener for over 5 years.
Most likely okay. That's what I believe. You can shop around for these 4 or 5 screeners. But more important than the screeners, I think it's still better for you to just start off with the annual reports. You don't need to go with all the screeners anyway. The annual reports is the best kind of tool. The ultimate weapon to make money in the stock market is still the annual report. Not the stock charts, not the screeners that I've just mentioned. I always go with the company annual reports.
Okay, so you are the fundamental first, technical
later.
Second. Yeah. Okay. So the next question is SMA only valid on daily chart, or is it still useful for hourly 5-minute? Or would that create more noise if SMA is used on the daily chart? Sorry, on the shorter time frame chart as opposed to a longer time frame chart such as daily chart.
As mentioned, I'm investing for the long term, so you asked
so
me about 5 minutes.
So you have not tested it on the 5-minute chart, You
No.
only look at it daily charts. Okay?
Correct. And by the way, this is a free tool by Bursa Marketplace, right? They don't
Yeah,
have a
I
5-minute
think-
chart, right?
Yeah, Bursa Malaysia has invested a lot of money to build this Bursa Marketplace, so I think you cannot find it anywhere else in other stock exchange. Yeah, I think Bursa Marketplace is Bursa Malaysia is one of the few exchanges that come up with this free tool for the retail investors to use. So yeah, so please make sure you make full use of Bursa Marketplace tool. It's a very powerful tool.
Very powerful tool, and you
Yeah.
don't need to pay money.
Yeah.
Super grateful to Bursa Marketplace. Kudos to you guys.
Yeah. Okay. Now the last question that we do with a small capital, do you recommend looking at dividend stock or potential growth stocks? Is it dividend more important or high growth company more important for a beginner with small capital?
This one, there's no right or wrong answer. But
Yeah.
if you ask me, right, if you want to see some results faster, go with a dividend one, because at least you get some cash in the bank, and with the cash in the bank, of course, you can actually celebrate with that lah. The idea about super growth stock is this: a lot of people get into investment, they are very into stocks lah. They are very excited. So this excited sometimes may be a bad thing, because if you are too excited about a certain stock, then there's no logic towards why you are making the investment decision. You can ask them, why do you buy the stock? Because they think that it's a potentially a high growth stock. Okay, and by the way, what exactly is a high growth stock? Different people will have different meaning. Like for example, they think that any stock that moves like that shoots up like this is a high growth stock. That is also not true. I mean, in my books lah, high growth stock means a stock, to me lah, this is my own personal definition, a stock that has a plan, that have strategies in place to actually increase their income. That's why they are growing. That's why they have achieved better compounding wealth. All right, they have actually compounded shareholders' wealth better than other stocks. That's why they are growth stocks. All right. So again, where do you get this kind of information? Annual reports, because it's only at annual reports or quarterly reports that this information, what the company is going to do with your money in the future, will be discussed. So that is actually another tip on how to find growth stocks. In fact, it doesn't mean that dividend stocks are not growing. All right, some dividend stocks, their dividends are growing, and therefore there are demand for these dividend stocks, and therefore there are more investors pouring money into these dividend stocks, and therefore their price also go up. So it doesn't mean that dividend paying stocks no capital appreciation. Back to differ, because a lot of dividend paying stocks, actually there are not many of them. 900 stocks, right? Probably you have 100-200 of them paying dividends, all right, or paying dividends on a consistent basis. Okay, now why do these stocks they can actually grow in terms of stock price? Because there are many kiasu type of investors in the stock market today who are seeking for resilience, stability, consistency in their financial results. For example, EPF, pension funds, mutual funds, insurance companies, and a lot of investment bodies who have billions of cash where they need to manage it and they cannot afford to lose their money. So if they want something which pays guaranteed or much more predictable kind of returns, they will of course go to some safe haven kind of investment, and they don't gamble. That's why we shouldn't. If they don't gamble, then why do we gamble with some stocks that has a lot of hype, a lot of promises, but do not know whether they can deliver or not. Do not know whether they can deliver or not. So the reason why these dividend stocks can grow is because all these billions of dollars that the pension funds have, they will pour into some place which is very conservative. So it pays to be conservative.
Yeah. All right. So I think from what we learned from Ian today is that we need to think long term and be a conservative investor instead of risking our hard-earned money in gambling away our wealth in the casino. Okay, treat the stock market like a casino. That's the biggest takeaway that I had today.
Yes, thank you so much.
Yeah. All right.